Hello, everybody. So today I want to talk about a stock that has frustrated a lot of investors for the past year, let's call it. And it's CleanSpark. Is a rebound in play, or is it dead money, and dead money is going to continue? So, first thing I want to say is it takes a unique investor to just be able to sit and wait. And sure enough, with CleanSpark, there's been so much sitting and waiting. The stock has not moved in a year. It's bounced up, down, some volatility, but it has barely moved. While, of course, Bitcoin has had pretty nice performance. But of course, if you remember this stock during the Valley of Despair, during the bear market of 2022, many of us were through that bear market buying a lot of these assets. I remember distinctly when CleanSpark was trading under $2, around $2, $2 to $3, and that lasted quite a while, and people had entirely capitulated. And so is $9 kind of a new $2 of back in the day? That's kind of my hope. But the thing is, sometimes you have to just sit on assets. You just have to wait until these assets eventually pop. And you don't know when the train is about to depart. You can't know when it pops. It could be in 6 months. It could be this month. The key, in my view, is to be positioned before the train starts running, because oftentimes a few trading days can make a compelling asset not compelling anymore because it's already run. And of course, an example that I think about often right now is SoFi, right? SoFi finally got a run, and it did nothing for like 3 years, and it finally got a run. Will miners like CleanSpark finally have their day in the sun? We saw Iron recently had its amazing run. Is CleanSpark going to be one of the next stocks that does that? On this channel, I like CleanSpark, I like Riot, and of course, I've historically liked CleanSpark and Riot more than Iron, and that is because of my bias towards companies that HODL the Bitcoin, companies that keep the Bitcoin on the balance sheet. CleanSpark being this company, although to my sadness, they sell some Bitcoin each month now. So it makes me a little sad. Note that for CleanSpark, the MNAV used to be much higher. I remember it being way higher than that for quite a while. It has also experienced some MNAV compression, now at a 1.9 MNAV. I want to talk about the fact that they did that convertible debt, which has pretty much enabled them to stop diluting. They've essentially stopped the dilution this year. We haven't seen much dilution, and the stock price hasn't done much either, So this is kind of like a real world case study of people tell you, if you stop diluting, the stock will go up. No. If you stop diluting, the stock may still go down. That's why I'm so happy that Strategy, for example, is back to diluting and back to harvesting the MNAV. I consider it kind of a sad thing that CleanSpark is not diluting, collecting that 91 cents over $1, selling CleanSpark as kind of a main product with CleanSpark shares and collecting that premium. I'm kind of sad they're not doing that, but again, I understand that these companies, these CEOs, we had a CEO change on CleanSpark recently. The pressure must have been insane when the stock is just sitting at not all-time lows, but recently all-time lows and not moving. There's a lot of pressure, and so they're trying to do things. In my view, a great move was that convertible note that they did and that they used to buy their expansion, to finance their expansion, to finance their new miners. That was a really good thing. Zero interest rate, 650 million borrowed, right? 650 million borrowed at zero interest rate. And of course, people say, we're going to have to pay it back. Well, if the stock in 2030 trades at $19, it will just be paid back via dilution in 2030. That's the beauty of these convertible bonds. We get the money today, we dilute in the future, and Bitcoin lifts all boats. Like, since this is a company that holds more than 12,000 Bitcoin, in 2030, if you fundamentally believe that in 2030 Bitcoin will be approaching 1 million, maybe not 1 million before 2030, maybe 500. If you believe we will be there is just a floor below CleanSpark, and that floor is going to rise, and it's going to take the CleanSpark stock price and make it rise, in my view, beyond the $19. And of course, it will just be dilution that we create then to pay off the debt. So again, the MNAV, which MNAV to use? In my view, the MNAV to use is 1.9 and not the EV MNAV, which includes that debt, which is debt, sure, but it's not really debt because it will be paid off via dilution in the future. So speaking of dilution, the dilution has pretty much stopped. We haven't had barely any for the past 3 quarters. Let's even call it 4 quarters, because from September to December, we didn't have that much. Yet, if you look at the same period, the stock price is down 18%, right? It had an initial pop as people were getting more and more excited about Bitcoin, and then it's essentially, it's been essentially down. And this is since 2024, by the way, so it's been way down, and it's been even more down since 2025. So what are we looking at? We're looking at a stock that hasn't done much. Even in the recent 2025 year, it is still down, despite the fact that we have stopped the dilution. And so now, of course, the big change is that CleanSpark is funding a large portion of its operation, its cost to mine. It's funding it by selling a part of the Bitcoin it mines each quarter. I generally find this unfortunate. I would much rather see dilution to pay for the Bitcoin. But I understand I'm kind of on my own on this one, because why do I like that? Well, if I were to see dilution, you sell a dollar for $1.91, and then not only do you take that 91 cents, you take that extra money, and you buy Bitcoin, you acquire Bitcoin at 44,000 a coin. And so it's kind of an equivalent of maybe a Forex MNAV, if you really think about it, with a limitation on how much Bitcoin you can buy. That limitation being about 600 to 700 Bitcoin for CleanSpark. But the market historically whined about dilution. There is no more dilution at CleanSpark, and the stock has not popped. And so this is where I go back to my initial point, which is sometimes you have to be willing to sit 4 years in an asset to be able to capture the 300, the 500, the 1,000% gains that may happen in a very short amount of time. If we get a short squeeze, if we get a market that wakes up to the reality and to the value of these companies. 44,000 is the cost to mine. It's very, very, very cheap. And I know that everybody weighs online. They show their own recalculation of a cost to mine. Sometimes they do simplistic division. Sometimes they put blind trust into GAAP accounting. And, they play with depreciation schedules, and there's a lot of philosophy that goes into calculating that number. There's a lot of opinion on how we calculate things that goes into calculating that number. And so you see a lot of bears against the miners, and they will tell you that all of the miners have a cost to mine of like well above 100,000, and they'll use like fantasy numbers. And that's because you're a big gap believer and you're a big depreciation believer. And I've went into my prior videos. It's like, do the miners, can you still use the miners later down the road? Well, some parts of the miners you can't. Mara is proving that you can use old miners much longer than people thought, especially if you have cheap electricity. The buildings are reusable. The transformers are a big cost of a mining operation, and the transformers typically don't become too obsolete. And so that's why I much prefer these direct online cash costs, which is essentially what this is. I much prefer that, which is a derivative of electricity cost. I much prefer that number than using some sort of gap derivation and saying, oh, it costs them 150 grand, because, it's a gap cost is not a cash cost. I like a cash cost very much. To me, this company is acquiring Bitcoin for cheap, and it is a cheap stock, and they are growing their bag, and they are doing a lot of very interesting things. Look at exahash, 50 exahash. I'll get to a second. They want to move to 60 exahash. Okay, they have a lot of smaller sites, but they are oftentimes within driving distance, and they are not spread out in too many states, right? There's only 4 states, and even when Wyoming is a small state for them, it's mostly the South. They're mostly in the South. They have more than a gigawatt of power under contract, and so that's a lot of power. That power has become much more valuable. Remember, they acquired a lot of these sites in 2022 at rock bottom prices when AI was barely a thing, when people didn't realize the value of electricity access. That's when they got those contracts. Those contracts are much more valuable today. If you look at their KPIs, they account for their assets at 3.1 billion. And we can argue about depreciation schedules on these miners. We can argue about the value of these buildings, but I tend to trust management on this one. I always trust management. You should not invest in a business if you don't trust management. That's like rule number one. If you don't trust management, you just should not touch a business. In fact, you should not invest in stocks if you don't trust managers. That's kind of my take on this. I've listened to so many calls of CleanSpark. To me, they're trying their best. But the point is, they account their assets at 3.1 billion. Market cap is 2.7 billion. So this company is trading below the value of its assets, in my view, keeping in mind that the debt is convertible, so the debt is simply just future dilution. CleanSpark will just print the CLSK common share currency to pay off that debt. So I like what I see. The efficiency is very good, by the way. 16 joules per terahash. It's among the lowest efficiency, right? It's better than Mara, obviously, even though Mara has gotten better. Iron is a little better than that, but Iron doesn't HODL. So I'd rather have middle of the road. Better, slightly better, but still a little middle of the road efficiency, and a miner that HODLs, that's someone who doesn't believe in Bitcoin and just sells off the Bitcoin. I think CLSK is too cheap, and I'm not selling this stock before there is any bounce. They are too cheap, and I'll show you multiple reasons. They are planning on growing their exahash by an extra 10, so an extra 20% growth in the exahash scale of the company, and of course, so that means they're gonna mine many more Bitcoin. As you can see, it depends, and the mining difficulty, tends to increase as well. These miners face a sharp increase in difficulty. Mining is a cutthroat business, but despite that sharp increase in difficulty, you had the Bitcoin halving in April of 24. We went from 721 Bitcoin, and then it got cut in half, even though they still grew 417 Bitcoin. And you can see we're slowly getting back to the levels of Bitcoin mined in 2024, in early 2024. So this company has been able to grow hash quite a bit. And if they grow by another 20%, they may be mining another 700 Bitcoin a month. And so what I'm essentially showing you here is that this is a growth company. This is a company that is not done growing. They are continuing growing. The Bitcoin in their treasury company has also increased very nicely over the years, until, of course, they decided to start selling off some of that Bitcoin to pay for the electric costs. And that's unfortunate, because you're growing the bag a little less fast, and I don't like that as much. In my view, I see a future where companies will be valued based on their Bitcoin bag. I mean, the treasury of a company at least will be based on their Bitcoin bag. There will be companies who are valued on their Bitcoin reserves, and so I want the company to be valued on its Bitcoin reserve. They're not going for Bitcoin reserve as fast as they used to. We'll see if the new CEO changes their mind. I mean, it's possible the new CEO says, okay, we're not gonna dilute anymore, but maybe we do another convertible bond. Like, I would be fine with that. Yeah, don't issue new more shares, but do another convert for business expenses, right? You do another convert for buying more miners and paying the electric bills. Even better, do like Riot has done, do like Mara has done, do another convert to actually go buy Bitcoin and put it on the HODL bag. That's also something I like to see them very much. But CleanSpark is focused on execution. What they do is execution. That's what they've always done. They're laser focused on execution. They don't lose sleep over AI. They don't do AI just yet. And this company yet has to bounce. We have not had a bounce. Cost per kilowatt hour, it's very good. It's very low. It's 5 cents. It's very low. There's lower out there, but if you have companies that may have a lower cost, like for example Mara has a lower cost than that, they don't have the good fleet efficiency of CleanSpark. So it's a balance between cost per kilowatt hour and fleet efficiency. You can withstand 5 cents if you have very good fleet efficiency. If your fleet efficiency is a little higher than say 16, 15 joules per terahash, you may want to have 3 cents per kilowatt hour. So it all depends. But all in all, I would say it's very dirt cheap. These contracts are so valuable, they're going to become much more valuable with the rise of AI. And let me conclude with AI as well, and the AI pivot potentiality, optionality. They haven't done that. They are laser focused on Bitcoin mining. But there's a new CEO now, and that optionality, I think, is important. Who knows whether they will do that pivot in a few years. And if and when they do that pivot, I want to point out that they have assets that are probably more valuable than people think. I know that they talk a lot about rural communities, and they talk a lot about being located in small towns and not big population centers. But if you actually analyze the portfolio, you realize that really for CleanSpark, it's Tennessee and Georgia that matter, right? It's really the 2 states that matter. Wyoming and Mississippi are great. Very small population centers, not necessarily a lot of value for AI inference. That's okay, right? They're great, but not too great. But if you look at their sites in Tennessee and Georgia, we're actually pretty close to large population center. If I want to show you one of their big sites is in Jackson, Tennessee. That's actually an hour and 20 minutes from Memphis. Memphis, of course, being a very large city. Memphis, of course, being a big AI city, right? Memphis is where Elon Musk's Grok super data center is located. So you're not that far, right? You're certainly closer to a big population center than Iran. I like Riot a lot on this channel, and Riot, I've talked about their Corsicana site being, like 55 minutes from Dallas. So you're pretty close to a big population center with that one AI center. And if you look at their 2 Georgia AI center, you're a little further away, but you're still less than 2 hours away from Atlanta. Atlanta, of course, being one of the biggest cities in America. And so you're not that far. Like it's these data centers. Yeah, sure, they're rural, but we're not in the middle of a desert either. That's the point I'm trying to say. And by the way, with the advent of course, satellites and satellite internet and telecommunications, over a very long run, we may also move into a world where really the location of a data center doesn't really matter as much, because it's just a matter of pinging the data center from the satellite back up, and you're not limited by fiber, which may or may not take a direct path between city and fiber, which may be redundant or not. And there's all sorts of issues like Iran is going through right now, trying to get a fiber to a new site. Point I'm trying to say is their sites, they may be rural, but they're not as rural as people think. And so maybe the narrative about Mississippi and the narrative of Wyoming is not the true narrative if you look at the scale of these data centers, which are in much larger population centers like Tennessee and Georgia. South, this is a company of the South, and they've expanded, right? This is their Georgia data centers. They've expanded to pretty big size. I mean, 150 megawatt for Sandersville. That's a pretty big site. 50 megawatt is also nothing to sneeze at, and I think this company could have optionality if they were to do an AI pivot. And there's always the quote-unquote risk, but it's a positive risk of they start discussing this on the call. And maybe if they start discussing this on the call, we see a revival of the stock price. So has the stock been dead money? Yes. Am I expecting a rebound? Yes. Do I know when there will be a rebound? Absolutely not. But I'm just sitting and waiting, and hopefully we get a wonderful fall and a wonderful September, and Bitcoin spikes, and we actually get some action in these miners. So anyways, this was not financial advice, not investment advice. This is only entertainment on this channel. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.